Welcome to my video on preparing cash flow statements using the direct method by preparing the spreadsheet approach. In our last video, we completed the cash flows from operating activities, and in this video, we're going to move forward again. We are going to prepare both the cash flow from investing activities and the cash flow from financing activities. When we do the investing activities section, we need to find the change in all the remaining balance sheet accounts. When you do the investing section, you use the remaining asset accounts. And then we'll do cash flow from financing activities where you use all the remaining liability and owner's equity accounts. And once you finish that, you will have finished the worksheet, and all you'll need to do is calculate the change in cash. So let's get back on task, starting with cash flow from investing activities. One thing you're going to find is that we use additional information in this section a lot, as information relating to relating to the other assets and liabilities cannot be found from the income statement, and we are through with the income statement. So we said we were going to make sure that we were ready to move on before we completed the operating section, and I was running out of time. I can only do a 20-minute video, so I'll show you that now. What you do is the first thing you do to make sure you're doing all right is you make sure that your journal entries are in balance, so your debits are equaling your credits, and then you make sure all of your current assets and liabilities balance. 48 minus 24 is 24, so this one balances. 3 plus 1 is 4, so this one balances. 30 plus 5 is 35. That's the end of our current assets. For current liabilities, we have accounts payable of 18 minus 4 is 14. 4 minus 3 is 1. 3 plus 2 is 5. Income taxes payable, 6 minus 1 is 5. And that's the end of our current liabilities. We also used every one of our balance sheet accounts. All of those are listed, and I'm checking those one at a time. When you have used your income statement accounts and all current assets and liabilities, with the exception of cash, you're ready to move on. So that's what that's about. Let's start now with our cash flow from investing activities. So we're right here, and that takes us to analyzing the remaining asset accounts. Notice that our next one would be investments. Investments change from 12 to 17, and the only way I can understand that change is to pull up my other data. It says the common stock of Baird Corporation was purchased for $5,000 as a long-term investment payable. Let's enter that on our spreadsheet. I believe that the number that we're on now is 10, as our last entry was number 9 before, so we'll debit investments for 5 and show the number 10 here, and come down to cash flows from investments and write purchase of long-term investment. So I got a little spelling error there. That'll make me crazy. And we spent 5. We're on item 10. We debited investment and credit cash. And that is the effect of that one transaction on our cash flow statement. Our next account is land, and it went from 45 to 55. Let's see what our other data says about that. It says property was acquired by issuing a 10% 7-year notes payable in the amount of $10,000. So let's record that on our worksheet. Transaction number 11 is that I purchased $10,000 of land by issuing a $10,000 notes payable. So I'll go down to notes payable and put that in there. Notice my totals are still balancing at the bottom. There's something interesting about this transaction. This transaction involves getting land and issuing a note. This is a significant non-cash transaction like you read about, so I'll put a star by it, and that will remind me to put that on the face of the cash flow statement. Let's go on to our next account, building and equipment. 260 minus the 24 we've already identified is not 252. So I know for sure that I need to look at my other data. My other data says new equipment was purchased for $16,000 cash. Let's go to our spreadsheet and record that transaction. So I'm on transaction 12, and I purchased $16,000 worth of equipment for cash. So I record the debit into the equipment account, showing that account, and I'll come here under cash flows and write purchase of equipment. Sometimes it takes a couple of transactions to make an account balance. Accumulated depreciation is the only one that's left, and we should already be in balance on that. So let's check the balance of our other assets now. But first, let me finish recording the purchase of that equipment of 16. If I don't do that, my journal entry won't balance. There, now we're in balance. Let's see. Well, go away, you little thing. How we did. 12 plus 5 is 17. 45 plus 10 is 55. 260 plus 16 minus 24 is 252. And 60 minus 18 plus 4 is 46. So now I know that this section is done because I'm out of assets to look at, and cash flow from investing activities has been calculated. It is the 5 from the sale of building minus the 5 from the purchase of a long-term investment and minus 16 for the purchase of equipment. You can see that I have put in another little formula right here already. You can see up here in my formula bar. Oh, no, you can't because I stopped thinking. You can see in my formula bar that I've automated this worksheet by summing in the inflows and netting them against the outflows. Just makes it a little handier, so these two numbers have been correcting themselves as we go. Well, it looks like we're ready to finish. Our next account that's ready to be looked at is notes payable. And if you'll notice, that one's already done. 0 with a credit of 10 leaves it a credit of 10, and that's what the balance in that account is. But bonds payable changed. It went from 75 to 100. Let's go back to our other data and see. On January 1st, 2013, $25,000 of bonds were sold at face value. So let's go ahead and record that. Bonds has a credit balance of 75, and in transaction number 12, we issued another $25,000 worth of bonds at face value. There's our credit. We would have received $25,000 cash from that, cash from bond sale, or we'll say bond issue. We had a credit on top, so we need a debit on the bottom to balance that out, and this is from transaction number 12. And look, I'm in balance. Excellent. What's next on my list? We have notes payable taken care of. The discount on bonds is correct already. Let's move to common stock. Notice there's a change in common stock. If you'll recall from our common stock chapter, common stock and paid-in capital from common stock tend to change together. Let's go to our other data and see what we can find. On January 19th, we issued a 5% stock dividend. Ooh, 1,000 shares. The market price of the $10 par value common stock was $14 per share. If you remember, stock dividends are issued at market value when they're small, and 5% is certainly small. So we need to show 14, or 14 times 1,000, 14,000. We're rounding in thousands. And it's par value 10, so we know what to do. Let's go to the worksheet. In transaction 13, we issue some stock. We issue $1,000 of par value stock. And since it was at $14 a share, I need to put the 4 there. And it's a stock dividend, so dividends come out of retained earnings. I'll put a 13 here and take the stock dividend out of retained earnings in the amount of the sum of the two. 10 plus 4 is 14. And yes, I still balance at the bottom. And look, I'm moving right along. Now my common stock account and my paid-in capital for common stock account balance. Does retained earnings, 40 minus 14 is 26, plus 37 is not 49. Back to the additional data. It says a cash dividend of $14,000 was paid to shareholders. Let's record that. Run number 14. And a cash dividend of $14, I think it was paid to shareholders. So 14 is 14. That's confusing. And come down to cash flow from financing and write cash paid. Spell it right. For dividends, cash goes down for 14. Let's see if retained earnings balances. And it does. 40 minus 14 minus 14 plus 37 does indeed equal 49. Since it does balance, we'll put a check mark here. The last account we have is treasury stock as a debit balance, and it went from 0 to 5. I smell a treasury stock transaction. Let's see what happened. Our last data says that on November 12th, 500 shares of common stock was repurchased as treasury stock at a cost of $5,000. Let's record that. We're on transaction 15, so let's record it. Purchase a treasury stock for 5 and come down and go here and write cash paid for treasury stock purchase, and we'll record that as a credit. We're on 15 and we'll record that as a credit for 5 as well. And I'm still in balance on my account, and I've ran out of transactions to record. I have everything balanced except cash. And this then would become my cash flow from financing. There's one more thing to do. it says to calculate the change in cash. So one more entry to make on our spreadsheet. So we go up to the cash account finally, and we're on transaction number 16. And I want you to notice that cash increased. Cash increased by $45.26 and 45.71. And we'll come down here and write cash increased by $45. Again, this one's not the most intuitive entry. And it shows that we are correct because 55 minus 16 and 6 equals 45. I had a little formula in there, which you can't see as well right now. Hold on. Now you can have a little formula that said sum the cash flow from operating, investing, and financing, and put the total here. And when it agrees with the change that I need in cash, you know that you've done your cash flow statement amounts correctly. So I really like the worksheet because if you make a journal entry and it's wrong, then the journal entry totals at the bottom wouldn't be correct and you would catch it. And hopefully you would catch it really quick. We're in balance at 622 and I checked after each transaction. The only other error you could make is if you left an account unreconciled and the only one we had was cash, and we just did that. If you scan down, every account has a check mark by it. There is no way that our cash flow statement can't balance. So I'm ready to prepare it, and I'll prepare the cash flow statement. Here is my cash flow from operations, from investing, and financing. Let's do that in another video so we don't take up too much time. Thanks for joining me on part 2 of creating a spreadsheet to calculate cash flow statements. Bye for now.